Look, as David was saying in the studio, President Trump, of course, moving from Seoul then to Beijing for this summit. How closely do you watch these summits as a CEO, and what kind of deliverables or takeaways would you like to see come out of this meeting?
Well, I think all of us as CEOs watch it. I'm not going to say I watch every move, but I think these are important summits. You know, this part of the world is a really important part of the world as trading partners to the United States, not just Korea and China, but all of Asia Pacific become very important. The center of gravity has clearly been moving east over time as these economies continue to grow and become, you know, a huge part of the global economy, with China, you know, the #2 economy in the world and on its way to being the largest economy in the world. So from the standpoint of being a trading partner, but also just really important partners in this part of the world, I watch it pretty carefully. And you know, how we interact as between the United States and this part of the world, and particularly China, I think can make a big difference over time.
How would you rate President Trump's progress since he took office? And how confident are you that we might see real traction when it comes to tax reform? Because I know that's important to you.
It is important. You know, I think I said on this network in Davos not that long ago, beginning of the year, that I was optimistic about where things were going in the economy, and I remain optimistic, in part because I'm an optimistic sort. But I think more than that, sort of on the basic fundamentals, you're looking at, you know, a market environment in the United States that's hitting all-time highs. Why? Because I think people are assessing that there is opportunity for things to get better. There's certainly an expectation that GDP growth is going to step up in the United States, and for that matter, on a global basis next year. One of the factors we watch very carefully, non-residential fixed investment, expectation that that's going to continue to accelerate, that people are going to be spending more on plant and equipment, they're going to be hiring more people. So as I look out, you know, for the rest of this year, but at this point we're almost done with the year, more to next year, most indicators suggest that those things are going to improve a bit. Some of that is probably on the basis of an expectation that tax reform gets done. Some of it, I think, is just on an expectation that, you know, things broadly are getting a bit better. I am optimistic about tax reform. It's, you know, early days, but moving very quickly. The bill came out of the House and I guess is in markup. I'm in China, but is in markup early this week. Lots of dialogue going on and has been going on with the Senate. Time will tell, but I'm pretty optimistic that gets done. I think in a lot of ways it needs to get done. I think that the positive elements of that for psychology in the business community and more broadly, you know, with the U.S. consumer will be, I think, very, very positively impactful. Just in, you know, in the sense of having people feel better about progress being made, but in a real practical sense. You're going to put more dollars, if this gets done, in consumers' pockets. You're going to put more dollars in the pockets of American corporations. Those corporations are going to be able to bring money home by the trillions that have been trapped overseas. And that inevitably, both, you know, from a consumer point of view and a corporate point of view, is going to mean more spending. You know, people, if they have more disposable income, are going to spend some part of it. Businesses are going to spend some part of it, and plant equipment. They're going to hire more people. And so, you know, I think net, it's a positive. Obviously, we got to get it done. I'm not in the middle. I live in Washington, D.C., so I'm pretty close to it, but I'm not in the middle of it. But I would say, you know, I think people are very focused, and there's decent progress, and I think reason to be hopeful that something gets done.
And let's shift focus to China. How aggressively are you planning to expand your operations here in China?
Well, you know, when I started almost 10 years ago to the day, and we had 5 hotels in China. We were one of the first companies when China opened up from the West to enter China, in fact, here with the Hilton in Shanghai. But we had 5 hotels. You fast forward to today, open and in the pipeline, we have almost 400 hotels. So we're growing at a very fast pace. But our goal, given the size of the population here, given what's going on with the growth in the middle class, and just the overall growth and demand for hotel rooms, is to be multiples that size. So we've set a goal to go from the 5 hotels that we had 10 years ago to having 1,000 hotels by 2025. And at the pace we're going, I think that's really a goal that is achievable. We're, you know, this year going to open up nearly 50 hotels. Next year we'll open up 60 or 70 hotels. So we're ramping at a very rapid pace.
And that part of that is going to be partnerships. How much of a role is H&A going to play in that, the conglomerate which owns a 25% stake?
The good news in our model, in a post-spin world, all of it's in partnerships. So almost, the vast majority of our growth everywhere in the world is really done with third-party partners, our owners around the world. So in China, we have a cadre of owners, as we do in most markets around the world. Plateno is a very significant partner of ours with our Hampton brand, but then we have dozens, hundreds of other partners that we're working with across the portfolio. H&A is a very important partner. They own 25% of the company. Lots of different things we're working on with them, with all of their travel assets, particularly in the airline assets, their online travel business, their tour business, and sort of connecting as much as we can our customer bases to one another.
How concerned are you about the pressure that H&A are under when it comes to their debt pile? Have you had a commitment for them? Have you pushed them for a commitment on their holding in Hilton?
No, I'm not really worried about it. If you look at the investment they made, first of all, they've done really well relative to where they bought in. They're sitting on a significant profit. But if you look at the debt related to that particular holding, it's a very, very low loan-to-value. Last I looked at the numbers, it was 30 or 40% levered. So I think their investment in Hilton is solid. They have committed to us that they're in for the long term, and I have no reason to believe otherwise.
How do you view the competitive landscape? You've got the likes of IHG, Starwood, you've got Airbnb being pretty aggressive in this space as well. How do you view that now leading into 2018?
Well, it's a competitive world, not just in China, but everywhere we are around the world we're competing. But I feel very good about this setup. I mean, the truth of the matter is we were a little bit behind the competition. Certainly when I got here, we've been catching up at a very fast pace. I think the goals that we've set will put us in a really good position going forward. And nice thing for us is, we have a huge scale as a global company. We're the second largest. We had been the largest. We're now the second largest in the world. We have over 5,000 hotels. We have over 1.1 million rooms open or in our pipeline. We're represented in 105 countries. In every major region of the world, the Hilton brand is still the #1 brand in customer awareness, including here in China. And so I think we had a tremendous foundation for growth that we've been able to sort of accomplish here in this last decade.